Yeah, let me give me just 1 minute. I'll pull it up. For those of you who have been following kind of what I've been working on lately, you might know that I am kind of obsessed with trying to solve some of the more fundamental issues that I think a lot of traders face. Because obviously the core of what I do is I try to build systems and strategies that are profitable. That's really what I spend most of my time doing. But as I've gotten further and further into doing this and talking to many of you and exchanging emails and all the things that I do on the practical side, I've realized that a lot of stuff comes down to really just like, foundational questions of how to take advantage of the market, and not just, is it a good strategy, but like, how do you know what strategies to trade at the right time? How do you do proper, risk management in real time and actually make those decisions? And a lot of stuff more along those lines. Like one of the things that I often looked at is like, hey, there's lots of different strategies you can trade, but sometimes people will say, well, you should trade that when it's a bullish market. You should trade this when it's, a different type of market. But no one seems to actually answer the question, how do you know what kind of market you're in? How do you actually, by what parameters do you actually determine, what kind of market that you're actually in? And so those are the kind of things that I've been trying to solve. We built this intelligence dashboard that I've shared a couple times. But another question, Graham, is basically on the question of how do you determine what kind of trade to take, or even what your potential is on a given trade, in any kind of foundational formulaic way. So let me give you an example, because right now I'm just talking theoretical and people are probably thinking, Nate, what the heck are you talking about? Well, let me show you. So you want to trade Apple, right? Everyone see my screen on Apple here? Let me pull it up to the stage. Boom. All right. You guys should see that now. Give me a yes if you guys can see that. Should be just my trading view chart there of Apple. And you might say, okay, I like Apple. Nate's been calling a breakout of Apple. We got it. Let's say that we're going to head up here to 255, just short of the all-time highs. Great, good trade. Buy some stock, or maybe do a debit spread, or take your best shot of what you think is going to happen, and hope for the best. But as far as I'm aware, there's not really a great way to look at the different scenarios and say, well, what could I make on this trade? And so I was thinking about that a lot over the last couple of days. And at about 1 o'clock in the morning last night, I finished the draft of the concept to help us answer that question. And so if you look at it, it will look something like this. Boom. So this is what I started programming and was working on until the wee hours of the night, which basically says, okay, so you want to trade Apple. You can trade as a single or a vertical. Click Apple. Let it load. It's going to find all the expiration dates available for Apple. And let's say, hey, I think, we just looked at the chart. I think we need to give it some time. So let's go ahead and give it out to 94 days. And then let's say, we want it to go to 255. So let's pick the $250 strike price. And then we can actually look, and it's going to tell us how much money we can make at these different levels. So if Apple jumps 5% in the next 7 days, that option is going to be worth about 79% more. If it jumps 5%, but it takes 30 days, it's going to be worth 42% more. But here's what's cool about options, and what Graham and I will tell you about why verticals are really nice most of the time. Look at 60 days out. You guys see that even if Apple goes 5% in your favor, 60 days out, you're actually going to start losing money on the regular call option. But if it goes 10%, now you're deep in the money relative. I don't mean actually in the money. You're still 20 cents out of the money, but deep in the money compared to the 14%, you're at 107%. And as you go through different scenarios of how quickly it moves and how much it moves, you can actually start to paint a scenario of how much money you can make. Or you could go to the custom scenario and you could say, okay, based on my target price of $255, and if I give it 90 days to do that, and I assume IV is similar to where it is right now, I can actually calculate the scenario. The option is going to cost $495. It'll be worth $576, and that's about a 16% ROI on that trade. And then you could compare that to a debit spread, which would probably have like a 350% ROI, and say, maybe I don't want to trade the regular out of the money call option because I can actually see the scenarios lined out. So this is something that I started working on a couple days ago. Like I said, got that draft done last night, Graham. It's just another way for me, because I'm trying now, I have a lot of strategies, as you know, a lot of ideas, a lot of ways that I want to trade the market. But now I'm trying to answer some of the more fundamental questions of like how to plan those trades, how to optimize those strategies, how to execute them in real time and have the information at your fingertips to really make great trading decisions, not just do I want to buy Apple or sell Apple, but really how do I want to go through that approach to maximize my win rate, maximize my ROI. And I know that you and I are going to talk a lot about that on Sunday, but we'll probably have to throw this tool in as a bonus to what we do when we talk on Sunday about really just putting those kind of tools in the toolbox as well, not just strategies.
That's really impressive that you were able to put that together. I can't wait to see more of that.
By the way, if you guys don't know, I'm sure most of you do know, but if you don't know, I am flying down to Florida to meet with Graham on Sunday, and we're going to do a pretty massive, I guess, case study, you might call it, or demonstration or class on how some of this stuff fits together. If you're a member of either of our services, you are invited to that class on Sunday. We're going to do it in person. Graham, I don't know if we're going to do it at your house or if we've picked a location, but we're going to do it in person on Sunday. So, guys, make sure you're there. We're going to walk you through some of the other stuff that I'm working on and also kind of a case study of how this all fits together. And, I don't want to be that guy who overhypes or oversells things, but I really think it's kind of the most important question there is in trading, which is, how do you apply the right strategies and the right plan to the right market so that you're not just treading water, but you're fully executing and taking advantage of all those things at your fingertips. So hopefully, give me a yes in the chat if you guys will be there with me and Graham Sunday night live, kind of doing something we've never really done, which is an all members or members only kind of breakdown. Again, some of the behind the scenes of what I'm working on, but really also trying to answer that massive question of how do you take advantage of the market in real time and leverage things, to get the best bang for your buck, and then compound that, because I think that's where things go from, great strategy to really hitting hyperdrive in terms of the potential.
Yeah, it's going to be awesome. It is members only for Sunday night at 7 p.m. Eastern.
7 p.m., right? 7 p.m. Eastern time. Just to clarify for one or two people, Nate and Graham are going to be in person. You got all 383 of you are not invited to Graham's house, where they're going to be in person. We're going to be on the web. You can join us.
Dave's not invited, but maybe some people.
I'm not even invited. I live 11 minutes away. I'm not even invited. But
Dave will invite you.
Oh, thanks, man. Thanks.
Yeah, that will be online. Sunday night, 7 p.m. We're going to show you stuff that we haven't ever shared. Actually, it's Nate's. I can't even really take credit for any of it, but we're going to show you something that has never been shared before. And that's why we're exclusively holding it for members only first. So you guys, if you are a member, you'll be the first to see it.
Yeah, that's a good point. Like it might make its way out, or at least parts of it might make its way out of the inner sanctum at some point, but it's definitely going to be members first and foremost Sunday night. So Joanne said, "Will the 7 kids be running around?" No, just me going to Florida. I'm leaving the kids behind. Unfortunately, you guys won't see them running around Graham's house. Graham only has one kid now, so he's not used to full destruction of his house in 24 hours. I don't want to bring that tsunami to him. We'll get him.
We got one on the way. Maybe we'll catch up. Probably not.
I had a question posted to me in a DM if you want to take it now or not. But Matt was asking if you could just talk about why it's better to do spreads than individual trades, single trades.
We've got about 4 hours of recordings in the opening playbook VIP area that will blow your mind, hopefully.
Just in the real brief, like
that example that I shared is kind of it. Like if you get up to a level that's way out of the money on an out of the money option, you would think you'd be making hundreds and hundreds of percents, but because you have to overcome the implied volatility all the time and the expected move, some of those options only make 15, 16%, and time decay kills you the whole time, versus a spread on that same exact scenario over 355 on Apple right now would probably make 400%. Or something like that, with all the same parameters of where Apple needs to go, same stock, same timeline, all of that kind of stuff. So that's really, kind of a use case in point. It would be, only 320%, not 400%.
Only.
But 320% versus 16%. But if you really, hopefully, I'm sure some of the people in the chat can attest to the fact that over time, I think Graham and I have convinced a lot of people of the advantages of that kind of trading, because once you really see the ins and outs of how those structures can be used, I think it's pretty mind-blowing compared to regular calls and puts in almost every scenario.
Yeah, they're cheaper. You offset time decay, and you have much better risk to reward, in my opinion, and based on the numbers. All righty. Well, we'll go ahead and dive into the Tuesday training and my overall market outlook for the week, for the Telegram of the week. And if you're not in Telegram, we'll get that link to you. This was a fun one that we looked up. We had some varying stats depending on the dates you ran and what AI program you use. But this was one that I found based on what happens when the market closes with all-time highs. And we found that the following day, it typically stays within a 0.5% range. Well, we've been able to take advantage of this a few times now. And if you guys have been following along over the last week, pretty much every single day, I think every single day, has been within a 0.5% range since all-time high. So hopefully you've been able to take advantage of that, maybe make some money off of that. I thought that was a fun little nugget that we found inside the closing playbook last week on Tuesday, I believe. I can't remember the exact date, but I think it was Tuesday. But that was a fun little nugget for you guys. For open trades I have right now from the opening playbook, it looks like I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 7 of which are positive, 3 really mostly flat, but 7 technically positive. 6 positive, 4 negative, but overall up in this grindy market right now. We're just still steadily trying to turn out some profits here. I don't think we're going to see as extreme moves to the upside as we had seen in the last couple of months, and I'll get into that here in just a minute. But first, with the morning market update, where are we now? Well, this screenshot here on the left is where the markets opened, and the screenshot on the right was where the markets were just about 5 minutes ago. And they faded a tiny bit since then, but you can see S&P opened down, NASDAQ down, Bitcoin down. Bitcoin is still down, but you can see the S&P flipped positive. So opened up minus 0.1%, barely even a move, and then flipped positive 0.1. So we're seeing a very small amount of volatility right now. We're actually seeing volatility continue to drop. You can see here below 15 today on the VIX reading, which is unusual for August. Typically, historically, August is one of the most extreme volatile months for volatility, followed by September as well. We have not seen that at all this August. Now, I'm not going to say that this is going to be the rest of August. As a matter of fact, probably the opposite based on what I'm seeing. But you can see right now just a very calm, steady market. Nothing too exciting happening. Pretty quiet overall. This week for economic news, we don't have any major news. Obviously, the Fed is meeting right now, so we'll get bits and pieces from them over the week. We have jobless claims on Thursday, which will be an important metric for the Fed's decision on cutting interest rate. And then Powell speaks Friday morning at 10 a.m. We'll see what he has to say. And then next week, again, a fairly quiet week. Tuesday morning, 10 a.m., we have consumer confidence report. This can move the markets pretty quick, right at 10. About a 5-minute jolt in the market. So be on the lookout for that. And then Thursday, we have preliminary GDP and jobless claims, again, followed by Friday's PCE price index. So they're all rated 3-star reports here, so they all can move the markets. The main one is going to be consumer confidence, in my opinion, for next week. For some fun nugget charts of the week for you guys, I got 2 bullish ones and 2 bearish ones for you guys to consider. First off, we hear all about the dot-com bubble and how this is the same thing happening all over again. And I am starting to actually believe more and more that a lot of the companies, not all of them, I don't think NVIDIA is a bubble stock that doesn't have a real product, but I'm starting to really believe that a lot of these companies are spending a lot of money on AI without a whole lot to show for it. And we can cover that in the coming weeks. However, with that said, I don't necessarily believe the top is in yet. I think we will see new highs again this year. But you can see here overlaid with the 2000s.com bubble. Here on the left is the S&P 500. Here on the right is the NASDAQ. And then overlaid in that red dashed line is the market that we're currently in. Does anyone else think that's a little bit spooky? That it's the exact same market action for the most part that we saw in the .com bubble. With that said, it looks, based on this chart here, you can see the S&P start to curl out, but the NASDAQ had some explosive growth at the end of 1999. I think it almost doubled. Yeah, it did almost double. 2,500, excuse me, it's over here. 2,500 to almost 5,000. An insane growth of a year for the NASDAQ. I don't think we'll necessarily get that much steam, but who knows? So all I'm trying to show here is that we may be entering a bubble territory, but we might not have seen that blow off top just yet. And when I say blow off top, this is what I'm talking about. That extreme melt up before a pullback. Another bullish chart for you guys is a lower swing high, or excuse me, a higher swing low. So when we look at the markets, how they swing, here's the higher swing low, because here's the previous one. So it went higher on the swing, higher on the swing, higher on the swing. And it looks like the markets may be forming another one right now. We will see. So for you bulls, this could be a good buying opportunity, or seen as maybe one coming up here very soon. However, on the flip side, for our bearish news today, we're seeing 11% of small businesses saying that poor sales were the most important problem to them right now. This is the highest level of small business complaints about sales since the global shutdown during COVID. In previous cycles, this has been a leading indicator for rising unemployment. It also signals that unemployment rate could exceed 5% in the coming months. This is a bearish signal. When we see small businesses struggling, that generally speaks to the whole economy struggling. Obviously the mega cap stocks are seeing profit margins unlike ever before, but the small companies are really starting to hurt. And obviously interest rates is a big factor for that. Higher interest rates means more expensive borrowing for them, which is bad for them if you can't, put that together. Another one for you, retail sales on food and service drinks hit a very extreme low here, where we're seeing not a lot of spending going on with consumers. We're seeing the consumer spending start to pull back even further, which is good. If you are Jerome Powell and you want to see inflation really cool off, but this could be bad for unemployment, layoffs, and an overall market crisis. Now, I'm not showing this to you to scare you and say tomorrow is going to be a crash, but this is something to keep in mind, that it can be a leading indicator. I mean, if you look before 2008, it popped before 2008, but it was about a year early. So again, just like if we look back at this chart, it's not saying a crash right now. It's still saying probably a year to run if we are just going to follow this completely. But after that is when you can start to see the aftermath. All right. Here is a chart for you guys for the VIX seasonality. And again, like I said, historically, August is a very, very strong month for the VIX, which is typically not so good for the markets. We have not seen that yet. We've seen VIX just going down, down, down. Today, again, it's down another 1%, which just means that the overall market moves are getting smaller and smaller. Gold, similarly, is typically very strong in August and September, and we have not seen this just yet for gold either. So they're kind of acting counter to what the market tends to do in August so far. However, the one that is holding true so far is good old Bitcoin, which is down to 114 now. After hitting 123-ish, 122, 123 just the other week. We are seeing a cool off in Bitcoin, which historically lines up with what normally happens for Bitcoin. You can see August medium price action, negative, September also negative, and the average for September negative. So we've been trading this in the perfect Bitcoin trade. We had a bit of a scare last week, still pulled away with a profit, and our current short position is up. Of course, I posted that in Telegram too, so hopefully you're in there. And I thought I was going to have to get on here and slap myself in the face about this time last Thursday with how Bitcoin was popping, but it did end up coming back into this seasonal trend.
I'm sure everyone would love to see you slap yourself in the face on an opening playbook session.
They'd probably pay more to see you do it to me. For earnings this week, obviously, we're getting out of the earnings season. Home Depot this morning. We have Toll Brothers today after the close, some other names there as well. TJ Maxx, Walmart. I circled those names specifically just because they give me a good gauge of how the real economy is doing. Obviously, with NVIDIA having record revenue or increase in their guidance, that's great, but that doesn't really show what's going on in the economy. That just means big companies are spending lots of money to chase after this AI rat race. When we see Toll Brothers numbers, we'll know what's going on in the housing market. When we see TJ Maxx, we'll know what's going on with a more of a staple discretionary stock. So it is a shopping store or a retail store, but it's not Lululemon. TJ Maxx is known as a discount store. If discount stores are struggling, that could be a bad sign for the economy. And then Walmart's kind of right there in the middle. It'll be interesting to see what they have to say Thursday morning before the markets open as well. For the overall market overview of where we stand, let's take a look. Last class, I told you we're going to get more volatility, maybe new highs, but a 5% drop at some point this month. And I told you it reminds me of this price action. If you kind of see a screenshot there, that was the last time I called for something like this. I think it was right about in here where I said, hey, I think that we're about to see a big correction. And then the market went on to make new highs about 2 weeks later. And I was like, oh, shoot, maybe I mistimed it. And sure enough, I was just a little bit early because we did end up seeing that correction. I don't think we're going to see this big dump unless something crazy happens in the news. Obviously, much of this had to do with the tariffs, but it does remind me of this sort of price action. So here's where we are right now. We did go on to make all-time highs. We are seeing the market start to stagnate a bit right now. Again, the S&P was completely flat yesterday, closed 0.01% down. Today, it's at 0.07% up. So very, very small moves happening. If you have the Newton momentum indicator, you can see, actually, maybe I can pull it up here just so I can show you. Oh, it's right there. Wow. I timed this well. You can see here the momentum increasing out of April, flipping through May. And then since then, if we look here at July to August, we're seeing a divergence in momentum. So momentum is slowing while the markets are going higher. Typically, this can be a sign for coming cool off. This is exactly what we saw in January and February. Momentum cooling, we can all see that, right? While markets were going higher. It was just divergence which said, hey, we may be seeing a pullback of some sort here coming up. So for my pullback that I'll walk you through of what I'm anticipating, it'll be something like this. Not this whole thing, but just a nice, healthy cool off here for August. So where do we go from here? Well, right now on the fear and greed index, we're still riding in that greed. Right there in the middle of the greed section. It's a little bit higher than it was last week. You can see last week's reading was 58. Now we're at 65. We're still not to extreme greed territory, even with the markets at all-time highs. And similarly, on the put-to-call ratio, which looks at the options market to tell us, hey, are we overcooked? Are we overbought, oversold? What's going on? There's no bias right now in the options market. We're still in between that threshold of 1 and 0.75. So there's not a lot of direction here right now to tell us which way things may go. Now, seasonally speaking, you can see here, again, August, typically a not so good month. September, not so good. This is our chart we looked at last week with the post-election year average compared to this year's market movement. We are right here where I've circled. Notice where the markets are right there. They're at all-time highs, typically. We're at all-time highs, typically followed by a 2-month correction. Actually, a little bit more according to this chart right here. So this is why I'm starting to get a little bit cautious of the markets. I wouldn't say fearful, just cautious, because I don't trust us at all-time highs right now. And here's just another look at that presidential seasonality. And you can see where we are now. This is my pretty blue line that I've made for us. And this is the historical averages. We are technically in this red year for which one to exactly look at. The green year would be all first terms. The red year's new president in office. So you can see here, typically a rocky 2 months. Now we're halfway through August and we have not seen much of that just yet. I think we had one day where the market sold off pretty hard about 2 weeks ago. Other than that, just been grinding higher and higher, really, really steady. So my upcoming prediction for you guys is the same one I had last week. And this looks like the chart from last week. So I should update that. But same thing, more volatility. We might see new highs in August, but I do think we are going to be caught by a 5% drop sometime over the next 2 weeks before the month is over or going into the start of September. I do think we are going to see a 5% pullback on the stock market. So I am just cautiously optimistic. I want the markets to go higher, but I'm not going to go in heavy right now on any one trade because it's just not a great high conviction buying opportunity, in my opinion. Nate, your
Graham, by the way, I've been saying too, I think volatility has to come into the market seasonally. We expect it to, and several other things that we're watching lead to that, not least of which is just that it's been so quiet and so calm. And so I really want to build a position based on volatility, either in the VIX or a related asset. I've been talking about this for a little while, doing some research on how to do it. So I'm actually going to show everyone my research so far in the closing playbook today at 3:30. I'm going to kind of walk them through what I'm thinking about, how I'm trying to build that position, what I've run into. So guys, make sure you're there for that, because I personally think, while I'm going to be bullish until the market isn't bullish and stay bullish directionally, trying to play for some volatility at the same time is a more, a more concrete hedge where you're not just burning money if you're wrong. And so I'm trying to do that, but I've run into some interesting challenges, and I'll just share the data with you because I think it's going to be an interesting learning exercise today on opening or closing playbook rather.
That'll be awesome. So make sure you're here for the closing playbook at 3:30 p.m. Eastern. That'll be fun. For our sector view, same thing I've showed you last week. This is our chart for seasonally in August. Notice it flipped from all green in July to mostly red in August. Tech, utilities, and real estate are the only ones seasonally positive. This one is in yellow because I do not like real estate right now, but I do like infotech and utilities, and we've been trading that for the last few weeks in a row. As a matter of fact, this was from last week. I said, again, not a time to be going in heavy bullish on swing trades, in my opinion. But if you want to trade along, these are the sectors I like: tech, utilities, communications, industrials. And I said, stay away from materials. Well, if we look at the shift week over week, this is only the second time this year that we've seen this. Technology has actually surpassed Bitcoin in relative strength. So if you look at the 1 month, 3 month, 6 month averages for each of these sectors, and I just threw Bitcoin in there to give us a gauge, second time this year, technology has popped above it. Also closely behind is communications. Those are stocks like Google, which we've loved trading, Meta, T-Mobile, AT&T. There's another big one. Oh, Netflix. There's a lot of really great communication stocks that are doing really well right now. Utilities, it has a red arrow. It's still really, really strong. You can see 1 month, it's still very positive. It just happened that technology and communications were stronger for the near term, and industrial still holding strong here as well. And then there's some shifting in the bottom side, but I typically don't spend too much time looking at the bottom side. I want to focus on these strong sectors at the top of this list. So again, same thing this week. For my top sectors, we're going with the same sectors. We like technology, communications, utilities, and industrial stocks. And I'm, for the most part, staying away from all of the rest, for the most part. So for the nitty gritty, what trades do we like this week? Well, we like technology at the top of our list. We've also liked Apple. We talked about how it's a unique buying opportunity on the monthly chart. And then here's a look at the weekly chart with the Apex indicator overlaid. You can see here is the entry we had a few weeks back. We took that, hit a profit target. We had another entry 2 Fridays ago. I actually have a trade open. If you've been here in the opening playbook, you should have one open too. On Apple, it's up 70%. It still looks good. Apple is still trending higher, and we like technology for the rest of August. So if you want to jump in on this one, same profit target, same stop price as we viewed 2 weeks ago, but the ticker is Apple. And I'll just type this up. Apple profit target is 240, which is not far off for this stock. And stop loss, which it's well above now, but 197.24. And if we look at Apex historically with Apple, I'll just post this in here. Let me see if I can make that prettier. No. All right. Well, that's how you're going to see it. Apple, when it has an Apex entry, wins 88% of the time. So you can see one here. Imagine 88 more of the last 100 signals. Pretty darn good. Averages 3%, 3.7% on the stock, a 2.98 profit factor, and a 4-week hold time. So we are entering near the end of that average hold time. You can see here it's not always 4 weeks. For example, this one was 1, 2, 3, 4, 5 weeks. So we can see that happen again. But we know historically this is a very, very high conviction entry for Apple. And we do also like the technology sector right now. It's our strongest sector seasonally and currently with relative strength. So if you guys would like to add another Apple options trade here, let me know in the chat. Again, I currently have a few open from the opening playbook, but I can get you another one here if you guys want to jump in late. All right, we got enough yeses.
And we also have that. We also have that Tesla one, Graham. That's Tesla's up another 1+%. And we have the 332.50, 335s from you, I think, last week.
Yeah, I'm up 30% on that Tesla one. I did have a profit target set for 50%. Got really close to it last week. Didn't quite hit it for me. You guys may have hit it, but up 30% there on the Tesla one. The Apple one's up 71.9% now. So love it.
Oh, wow. Nice.
All right. Let me go ahead and pull this up. Oh, I got to hide my screen first. All right. Here we've got our good friend Apple. And there's a couple of ways you can trade it. Let me make this bigger for you guys. Obviously, you can trade it for a weekly wrap order like I like to do. But we also know that historically, it hits that profit target of 240 in 4 weeks. We've got about a week and a half left for it to technically get there. Historically speaking, again, it could take a little longer. There's no telling it could happen tomorrow. Nobody knows. But we can structure our options in a way that should help us take advantage of it. So if I'm looking 2 weeks out, 1, 2, you can see this was our position we took either last week or the week before, well in the money now. But if you want to trade it with a wrap order, sorry, I'm not used to having the screen so the text size so large on Apple. It's hard, or on Thinkorswim. Kind of hard for me to see. All right. See if I can screech this down. Nope. All right. I'm going to wrap it here. Let me see what the prices are, and I'll give it to you. All right, I'm just going to use this September 5th expiration. That gives us 2 weeks. And I'm not even using the profit target here. I'm just saying that Apple's going to be bullish, gain $3 from here. That's a 1.5% for Apple over the next 2 weeks. Obviously not much. And Nate, let me pull up that amazing calculator you made for us, and I'll type it out for you guys as well.
Yeah, have you guys been using the new and improved opening playbook VIP? We got to start calling it Playbook VIP since it's both. Anyone been using the calculator recently?
There we go. All right. Every day. I love it. So I'm looking at the September 5th expiration, and let me pull up my trade sheet. I'll type it up and send it to you guys and then walk you through it just so everyone can have some fun while we do this together. Today is August 19th. Apex entry, ticker's Apple. I'm going to be using the 5th of September. So I'm going to buy the 232.5 call. You can see Apple's at 231, so we're technically one strike out of the money. But I'm going to buy that 232.5 call and sell the 235 call. Right now it's at a net debit of 120. So let me type this up. I'll punch it in the chat and I'll show you visually and then on the calculator what that looks like. And again, use a limit order. Make sure to use a limit order. Apple's got really tight spread, so it's not as big of an issue. But definitely whenever you're trading spreads, use a limit order. It's at 115 now, even better. All right, real quick visually, let's look at Apple here. Popped above the 200-day moving average. Love it. So here, 235. I'm finding 235 on the right side. So we know the profit target's 240. I'm going to go cut it in half here. So by September 5th, if you see my crosshairs here, this is where we're betting Apple will be above that line by that time. So above that price, by that vertical line that you see, which is not that big of a move. You can see it was just almost there the other day. If so, based on the prices, let me use our calculator and walk you through it. We're buying the 232.5 strike. We're selling the 235 strike. You can see here I'm using the debit spread calculator on the call side. Entry price right now is 118. Just put in 1 here for example's sake. Take out the profit target. So what's cool here is now that Nate has finished up improving our calculator is it gives us basic targets, gives us a custom target, which I currently have at 0, and what happens if we hold till expiration. So if we hold until September 5th and Apple's above 235, our maximum return on investment here is 119 or 111%, 112% we'll call it, just round up. Return on investment. So per contract, we're risking $118 to turn it into $250. Again, we had someone ask earlier, why would you not just trade calls? Well, here on the calls, let's say I bought the 230 call, for example. It's $600. Just do a comparison sake. $600 per contract. Oh no. $600 per contract. Our trade is $118 per contract. So it's 1/5 the entry price. All right, let's keep going. The 230 call, you need the stock to be above 236 by expiration date to make, guess how much? If the stock's at 236, you make $0. So you go through all of that pain, all of that struggle, all of that checking the charts just to make nothing. We, on the other hand, make 112% if Apple's above 235. So if it moves even less than what I just told you, we actually double our money. Now, for the call option to double your money, you need it at 242 to see 100% return on investment. You need it at like 243 to get what we're doing. So we need Apple to move $8 less. That's about 4% less to get the same result. Now, I know I just did some mental math and telling you about it, but hopefully for those of you who are not familiar with the debit spreads and the way we trade, you can see that how powerful this can be. We need a much smaller move to get double our return on investment. So we need Apple to gain about 1.5% versus 5% to double our money. All right, so I'm going to ship this off. It's at 115 now, even better. And filled pretty quick right there, 115. Now, some of you guys are asking, do we let it expire worthless? I'm going to hold this one, but if you want to set a target, again, our calculator does some basic math for us here. So let's say we just want a 50% target. You know the limit price is set. So I got filled at 115. If I want to set a 50% target, I would set to close it at 172, good till canceled. If I wanted to go for, I'm just going to make this up, a 30% target. Type whatever you can imagine in there. Again, this custom target line does that for you. Set your limit price at 149. Good till canceled. Now, if I'm super crazy and say I want a 200% target, the calculator is smart enough to know that's not possible because our max ROI is already defined right here. So you can't get any higher than that. But when you're within range, it'll give you the exact price to set. Very cool. All done for you. All right. We will keep cooking from here. So that is our Apex signal of the week. If you hold until expiration, the max ROI was 117% based on that entry price I got of 115. So you can set your profit target. Just use the calculator, put your entry price, put your custom profit target price. If you want one, I'm just going to keep on holding it. Again, I said earlier, I'm cautiously optimistic. I would love for the markets to go to new all-time highs. However, I know historically that tends to not happen here in August going into September. So that's why I'm trading one contract versus before you might see me do 10 contracts here. So position sizing is just decreasing because I don't want to have a whole lot out there risked if we do get a quick pullback. For the hot sheet pick of the week, and we've been on a roll with the seasonal picks. The one for this week is NTR. I can't say that I've ever traded this one before, but it came up as a stock that has gone up every single year on August 20th over the next 22 days. So that would put us to about, September 10th, September 11th range hold time here for NTR. Typically gains 2.7% on the stock. We'll trade it here in just a second. But I do want to just highlight the incredible job that we've been doing with the seasonal on the clock stocks program, where we're on a nice little 20 for 24 run in there. So it's been really, really hot. We're using a lot of these orders that I'm walking you through now, where we're going for a double on our money, sometimes more when the stock barely moves. Now that is a premium product. It's a couple $1,000s a year to join. However, we did make a light version, if you will, where you can get what I call the hot sheet, which gives you tons of stocks with their exact entry dates, exit dates, so you know exactly when to enter and when to exit, and the percentage the stock typically moves during that time, like you can see here. And that is for free. We actually mail it to you, so you just cover the shipping cost, and we send the hot sheet to you. So we'll post that link here in the chat. We haven't done it in a while. Again, guys, it's a free offer for you guys. You just cover shipping, and you can get this calendar sent to you where it'll say June 9th, buy Apple. June 20th, sell Apple. And the reason that works is because it's looking at the dates that these specific stocks have gone up 10 years out of the last 10. So very, very strong seasonal bias with a perfect track record. Again, no strategy is going to work 100% of the time. Don't throw all your money in on any one of these picks. But I mean, you can even see the testament of how we've been doing on our live trades and the premium portfolio for it. We're hitting an 83% win rate over the last few weeks here on the seasonal picks. So that is that link there in the chat. We will ship the sheets to you. You can trade them yourself. Of course, if you want to go ahead and upgrade from there to the On the Clock Stocks program, that offer is available too. But just go ahead, click that link in the chat to grab your free copy of the hot sheet. You have it on your desk. You can reference it anytime, anywhere. It's pretty awesome.
Yeah, it's not one of those ones where it's free plus shipping, and the shipping is $500, right, Graham?
It might be $500. I'm just kidding. Click that link to find out. You'll see how much. I think it's $6.95, $6.
I remember in the old days, some people would do like the eBay stores and be like $9, and then you like go to like, oh, $9, I'll buy it for $9, and you check out, it'd be like $163 for shipping.
No, nothing like that, guys.
I see what you guys are doing here.
We actually, it costs us money overall to get it to you guys. You just cover the shipping. We just want to do it to give you guys more value any way we can. And of course, you get an online version as well. So you can have it in a PDF format and on your desk in a hard copy format. So let's look at NTR. Again, this is not a stock that I normally trade, but when we know seasonally it's gone up 10 years out of the last 10, it might be one we want to take a look at. So here's a stock. Let me see what. Oh, it is a material stock. So again, typically I'd say let's stay away from this one. However, we know it is seasonally strong, so we can throw a little nugget out there and see what happens. We know that it typically gains 2.74% over the next 22 days. So let's just take that current price, 56.91 times an increase of 2.74. That puts it at 58.46 by September 11th. So you can see where my crosshairs are there. I may trade it a little more conservatively. Here, let's go ahead and take a look at the options and see what we've got. So again, we want to get as close to September 11th expiration as possible. Right here, you can see the 12th is going to be the one we're going to go with. We know that seasonally, it says it should get above 58.46 by expiration. So let me see what those options look like, and we can go from there. Again, this is one where you're definitely going to want to use a limit order, as there's very low volume here. Maybe one, two that you would prefer to buy a call. However, again, I do not prefer buying calls, generally speaking. So let me type this one up for you guys, and I'll post it in the chat if you'd like to nibble on it with us. We'll do a hot sheet entry on NTR. I think this may be my first time trading this one, to be completely honest. So I'm excited to see how it does. Always nice when I can add another stock to my active trade list. Alrighty. Sorry, I'm currently at 40. I'll just call it 45 cents because I've seen it move a little bit. Here we are, coming in the chat. So I'm using the 12th of September expiration. Again, we know historically it should get to about 58.5. We're going to trade it to just 58, so it just needs to gain about $1 from here, about a 2% move on the stock over the next 22 days. If we are right, well, it's over double your money. Let me run you through it again here. Let me see if I can just zoom this out. All right. That might be really small, though. We'll see. Nate, tell me if it's too small. Where did my finger?
It's pretty small.
All right. Where did he go? Wow. This is weird. Oh, it's probably because it's full screen. All right. I will make it bigger. If I can grab the corner. Here we go. So we are trading NTR. We're buying the 57 call, selling the 58 call, looking at entry price of, where to go? 0.45. Again, it tells us if we hold it until expiration, we can make 122% return on investment. Again, with the basic calls, if it goes to 58 by expiration, it's $2 plus our strike price 56. So if it goes to 58, which is where we need it, we make 122%. Guess how much call buyers make? Again, $0. You break even if you're right with calls. We make 122%. So this is our math for you guys. Of course, if you want to set profit targets along the way, here's your numbers. And custom profit target is there for you as well if you'd like to go for that. So I'm just going to do one of these here. It'd be good for me to track and follow along with. Filled right away at 48 cents. You can probably get cheaper. You can probably get 45. Let me see if I can do that. Very, very affordable too. $45 a contract. I'll let that one sit, see if it fills. But that's why I love trading this way. And then last but not least here, jump back here. For Newton, we had Uber turn positive yesterday. I haven't looked at Uber today. I have no clue if it's up or down. It's, oh man, it's up 2% almost today.
Wow, and that's with the market actually getting a little flush right now. So that's impressive.
Oh, really? There's always one of these picks, or when every single week I put these together the night before, and always there's one of these three that's moved a lot.
Yeah.
Overnight. So Uber's up 1.73, but you can see here on Newton, when it flips bullish, good things tend to happen. So if it flips from red to yellow to green, runs up. Red to yellow to green right here. Actually, it skipped yellow, just went straight to green. Moves higher. So we're getting another similar price action there. We're seeing a positive trend here on Uber stock. It is an industrial stock. Remember, we like the industrial sector. Right now, it's one of the strong sectors for the month. And let me go look at the options here, and we can trade Uber together. Now, this is one, again, I said this earlier, but you may want to just use a weekly wrap order on this. Regardless, I'm going to go to next week's expiration just to give us a little bit more time since today is Tuesday. And let's go ahead and check out the strikes here just for a wrap order on Uber. See what we're priced at. We may go a little bit further out. I'm going to do this one right here. So this is a $1.50 move on Uber, another 1.5% move, and you are there for next week's expiration. Let me type this up. This is a Newton entry. Ticker's Uber. We're using the 29th of August calls. And I'm buying the 95 call, selling the 97 call, all on one ticket, using a limit order for 95 cents. All right, there you go. Here's Uber in the chat for you guys. And again, we were trading this bullish entry here. We know typically when it flips green, big moves. Green, nice big move. We only need Uber at 98 by next Friday, so we are trading a move higher here. Okay, NTR got filled at 45 cents. Move higher. If it's above this line by expiration, we're going to make a little over 100% return on investment. So again, I'll pull up the calculator for you guys just so we can do it all together. And there goes my screen again. So fun. All right, here we go. Just going to type this in for you guys. 95 strikes, selling. Oh, and I showed you wrong on the chart, actually. I showed you 98. We need 97. So much less of a move. All right. 97 by next Friday. So you can see here, above that line by that time, we double our money. Not a big move at all for this stock. Entry price, 95 cents. Again, we're going for 110% maximum ROI here on a very small move in this stock, about a 1.5% move for Uber, and you double your money. If you want to use profit targets, be my guest. Oh, look at this, Nate. I didn't even notice this. You put in the break-even price.
Of course I put in the break-even price, Graham. I do everything you ask for, you get from me.
Awesome. Well, there you go. Now we know the break-even price.
Fans.
If Uber is mostly flat, if it only gains 30% or 30 cents this week, so if it's barely even budges, you actually break even. Calls, you lose everything. The beautiful thing, I said this at the beginning, with the debit spreads, why we like them, you offset time decay. You can see that here. Stock basically is flat. You don't lose much at all. You actually break even here, so 0%. All right, let me go ahead and punch this off, and then I'll jump into the chat. I'm going to set it at 95.
By the way, Stacy mentioned market dropping. Yeah, we're getting some tech sliding here. The SPY is actually holding up pretty well. It's only down 0.18%, even though the Qs were down a full percent for a second there. So we're actually getting that holding up pretty decent. Some of the other names, the more risk-on names, AMD obviously down 4%. Hood took a little rip down. Tesla took a rip down. But Tesla, it's funny. I was on Twitter just seeing if there was any actual news. I didn't see anything major. And I saw all these people talking about Tesla. They were saying like, oh, all you idiots buying Tesla. See, it's a junk stock. It just dropped, from 341 to 333, like basically saying anyone who's holding Tesla is an idiot. Meanwhile, I'm thinking the Qs are down 1%, the MAGs are down 1.5%, and Tesla's down 0.3%. So it's actually holding up better than the rest of the market. So I still like Tesla. It is a high risk stock. I mean, I'll never deny that, but I think the risk rewards are pretty good there. But the most interesting thing to me right now is we are getting the first little flush in a couple weeks. I mean, it's still really nothing major right now. Q's more major. XLK down 1%. And Graham, the VIX has popped 0.5% right now, even from these crazy lows.
Yeah, it's just not moving.
It's just stuck. There is no volatility. It's stuck there. You would think when the market's been so tight, even this little drop today would pump the VIX up 3, 4, 5%, but it is not moving.
Mm-mm. We'll see what happens, though. Historically, this is the time when VIX is about to heat up. So we'll see if we get that again. Now, here is the last day of August, or going to September. You can just see it right here last year. VIX from 1450, sounds reminiscent to where we are now, to 23 in a matter of 2 days.
Yeah. Nick, I have PanW still open. I'll cover that in the closing playbook as well. And then I'm going to take you through my VIX plan. It's still a developing plan because, as I said, I've run into some things that are really interesting, some data to share with you and to walk you through. And as I develop a plan and build a position, I'm just going to keep you guys in the loop step by step with me. If you want to build a position with me, you can. If you just want to use it for educational purposes, you can. But either way, I think it's going to be interesting. So I'm going to walk you through that during closing playbook. Make sure you're there at 3:30 p.m.
Yep. All right, Nate, that's what we got today to cover. I'll jump here in the chat, see if I missed anything, answer any questions. Nate, like you mentioned, we are getting a small flush out on Hood, which is actually a stock that I'm trading right now and really like. It's very reminiscent of what happened on August 13th. We saw the exact same candle just to see Hood, Robinhood is the stock, but ticker's HOOD, rally right back to where the highs were over the next 3 days. You're at the same sort of area right now. We saw Robinhood post 117 in the pre-market this morning.
Yep.
And I don't know, I'm probably not sharing screen, but 117 in the pre-market, flushing out now. I think it's an excellent buying opportunity on Robinhood for the long haul, but also for the near term, where you can get in for a very, very good discount right now and trade it this week. In fact, I have a trade on it right now, and I might add to it because I
had the thought of buying some Hood, or at least building a position at 105. I'm just not sure it's ever coming back to 105, man.
I don't know. I think that's too good of a stock. They've got too many good technological breakthroughs going on. I think they're going to be the next JP Morgan, personally speaking, over the long haul, but we'll see what happens. I could go for an hour on it, but really because they have the younger generation all hooked to Robinhood, I think they're going to take over. But with that said, if you guys would like to get in on the action that I'm doing each and every week, each Monday and Tuesday. Oftentimes, like today, you can get an entry for an even better price on this particular options I'm trading on Hood. We normally enter for around $1, and when it works out, we flip it to $2 by the end of the week. Always shooting for a double each and every week. No, we don't win every single week, but when you look over the long haul, I've been doing it for 2 years now publicly, and it has been outperforming any other strategy I've ever seen on the profit. It's totally remarkable, and I would love for you guys to get one last shot to get in on it this week if you would like. So with that said, let's go ahead and get that rolling.
Again, you guys know the drill. Profits, performance, not typical. We're not going to guarantee any future earnings because, of course, you could lose money.